The US dollar has been range bound against the Canadian dollar for a number of months now, between around 130.50 and 133.50. That's a wide range, of course, in this currency pair, but we have seen it rebounding between these levels, aided on the Canadian side by the volatility that we have seen in oil prices. Now, that volatility in oil prices has not subsided at the start of the year. The surprise attack on an Iranian general by the US earlier on in the latter part of last week has sparked fears over a potential conflict between the US and Iran. Overnight, we saw the retaliation from Iran, which targeted several US bases. Now, there have been no casualties reported at this moment in time, which may be why we are seeing, as the dust has settled, we have seen a bit of a pairing of the moves that we saw overnight. But that is going to leave the Canadian dollar susceptible to the moves that we're going to see in oil prices on the back of that. We have to remember that last year we were talking about the Strait of Hormuz quite a lot. A significant portion of global oil moves through the Strait of Hormuz on a daily basis, and therefore, given the position, the proximity to Iran, and the events that we saw unfolding last year with certain ships being targeted, then this does create an area of vulnerability for the global oil market. We know that there is a correlation, a relationship between the Canadian dollar and oil, which makes this particular currency quite susceptible to how the geopolitical risk does evolve over the coming days and weeks. But what's been interesting within this currency pair itself is there has been intraday volatility in the US dollar Canadian dollar pair. But the fact that the US dollar has also been seen as something of a safe haven means that when we are seeing heightened geopolitical risk on the back of these events in Iraq, then we are actually seeing a safe haven currency like the US dollar playing off against the Canadian dollar, which is benefiting ultimately from the spikes that we are seeing in oil prices associated with that heightened risk in the Middle East. So we are just seeing this going back and forth really in this relatively shallow but choppy and volatile range. What's interesting about this chart though is the fact that we are seeing this choppiness around the 130 level. Now, we are slightly broken below the 130.50 to 133.50 range, but I think for many people 130 is the key level rather than 130.50. So if we can break and hold below 130, then that could turn into a significant breakout. But I think for that to happen, we have to see a significant breakout in oil prices that supersedes the moves that we are seeing in the US dollar as people move more towards the safe havens. Now, the US dollar is typically a safe haven because of the US 10-year treasuries. Gold is another safe haven, and there are others as well. But the fact that we are seeing spikes in oil prices alongside this does complicate things, of course, for the US dollar Canadian dollar pair. Ultimately, it will depend on what further escalation we see in the Middle East in terms of what kind of spikes we do see, therefore, in the US dollar and in oil prices as well. We're expecting to hear from Donald Trump this morning, who will release a statement on the Iranian attack on these US bases to see what the US response is going to be. Had there been casualties, then I think we could have expected a much stronger response from the US side. As it is, we may see a slightly softer response. But of course, this is a situation that has already dramatically escalated over the last few days and has effectively come out of nowhere to surprise and shock the markets right at the start of the year. I don't think anyone would be surprised if to be honest, to see a strong response from the Trump regime to the Iranian attacks. But I think it's quite clear that the Iranians wanted to send a message rather than potentially causing actual harm to effectively tell the US to back off. But ultimately, like I say, there's so much unpredictability around these situations, very sensitive situations, and I think that's why the markets are reacting so sensitively to it. Yes, we've seen them pair the gains that we saw overnight as it's become clear that there were no casualties, but that doesn't mean that things can't and won't escalate further, creating further uncertainty in the markets, further unrest in the markets, and once again, that's where we would likely see moves towards the safe havens, but also spikes in oil prices as well, again putting the focus on the Canadian dollar.